Happy Monday, and I'm pretty sure it's not going to be happy as I start to announce. The target is that a lot of people currently have. Some have the target of $67,000 per Bitcoin. Some have $29,000 per Bitcoin. Everybody's saying that gold is soaring. People are in lines to buy gold. It's all super uncertain that everything is going to crash and burn and it's the end of the world. Let's go through this. Let me show you one piece of news that is, I think, the most important, that can be the driving factor and the deciding factor for the next price action for Bitcoin and for ETH. And for all of it in general, because overall here, as you might remember, the previous video I talked about my entry points that I was really interested in, and even though our trading is doing quite well overall, and I showed you my P&L for the last 6 months, every single video I was making, so I hope that it actually, gets some respect, that I'm one of probably 3 people in the internet who shows long-term P&L for more than 6 months and shows you every entry and every exit and so on. But anyway, this video is not to brag about nothing, it's just to give value. So let's just start with this. We have small pump here, which makes people kind of happy. We're setting it back in the same range kind of that we were since August. So nothing much is happening in ETH. In Bitcoin, we kind of are going back into the same range yet again, which we have been in for so long. And this area of interest kind of worked out quite well. But when it comes to my trades, I had, as you might remember, I told you about these entry points in my previous video. I did take some trades in a live stream. I did crazy DGen live stream on a Saturday, so we lost like $1,000 there, and we just a DGen live stream type of thing. So it didn't really affect the P&L too much. But these main orders that I had on ETH at 3,600 basically and 3,300, one order did not get taken by literally $70, $80. Sadly. Same thing on Avadex. I could not really catch a trade, unfortunately. You guys remember that with Bybit there is a bunch of rewards you can claim in the description of this video that Bybit was nice enough to provide for our community. It's a centralized exchange. It's big. It requires KYC. It's got a good liquidity, a bunch of pairs, and you can get up to $100 in welcome rewards for just like completing KYC. You can claim $20 in reward center, and then up to $30,000 in initial deposit bonuses. Now with Avadex, less pairs, less liquidity, but decentralized, anonymous, non-KYC, and fully self-custodial. So when you're trading, you're retaining full control over your assets because the money is on the blockchain, not in the hot wallet of a centralized exchange. Link to Avadex also down in the description of this video, and you can claim a 10% cash back on trading fees. And also the trades I'm showing you here, whenever we're taking market order trades, you can also see them for absolutely free. So trying to provide value to you guys. So I'm going to link a video up here where you can actually watch an instruction of how you can become a Bybit or Avadex trader and actually get access to my trades for absolutely free. So go check it out. Now, about the news, before I talk about my price targets, my expectations going forward, I have a few theories, quite specific ones. We remember that Bank of Japan, came out and said that they're going to raise rates if economy aligns with the forecasts. And this is whole Japanese trade unwinding situation that they might be dumping the U.S. treasuries, which would be bad because they're biggest external U.S. treasury holder. And this could, rally the interest rate of long-term treasury bills, which is not great. It's bad for the economy. A lot of people, like all these things put together, are important and they are scary, and that's why a lot of people are starting to come out and say that oh well, we're going to be going far lower, it's going to crash, it's the end, blah blah. Like James Wynn, the guy that I know quite well, and I have huge respect for him for what he has done previously, and it's like crazy story, man. He is saying that we shouldn't capitulate to like 67 to 75k, which is an opinion, which is fine. Andrew Tate, I did not know that he is a trader, actually. But nonetheless, he came out and he said that Bitcoin is going to $26,000. Probably nothing more than a publicity stunt as usual. But nonetheless, there's so many people that are coming out and saying that, it's the end, it's going to all crash. What people forget about, though, is it's not driven by, the market is not driven as much by long-term, by emotion or by technical levels or by anything else but one thing. And that one thing is liquidity. And for this, we have this piece of news, which I think is far more important than anything, quite frankly. This here is important. This can be some short-term pain, but this here is the answer to all the questions. Wall Street moves up timing for Fed ending its portfolio unwind, which means that the Federal Reserve is planning to stop its quantitative tightening, which has been sucking the liquidity out of the market, and actually, possibly even in 2026, putting that liquidity back into the market and stimulating the market and that's when we're going to see the Valhalla. That's when we're going to see the real price pump, when there's going to be more money in the markets, when the money's going to flood the market. So if you study this article, more Wall Street strategists are now looking for Federal Reserve to stop shrinking its massive portfolio of securities sooner than previously expected, after Chair Jerome Powell signaled the process could end in coming months. This is what we've been waiting for. We've been waiting for them to start sucking liquidities, to stop sucking liquidity out of the market and start putting liquidity back into the market, or at least stop sucking it out. So Barclays and Goldman Sachs are moving forward their forecast from the end of the first quarter of 2026 to as early as the end of this year. So I think that this is what the market is going to start to front run a little bit. And I think that this is exactly what we're seeing here. This is the front run of this. If you look at gold in this instance, gold is kind of standing in the same place. But overall, and the M2 money supply possibly could start turning a bit because it started curving down. Did not pull up this chart. I think you guys can pull up the M2 money supply yourselves. But overall, a lot of firms have had firm expectations that quantitative easing will not come until maybe end of 2026. But now big shifts are happening, and the Fed starts to understand that they cannot keep the policy that they have for much longer. So this means that possibly we'll see, and it's confirmed by Jerome Powell, that they're looking into this to actually get this overturned, the current policy. And the only question left currently is, when are they going to start? Okay, they're going to stop quantitative tightening, but when are they going to start quantitative easing? Because the stopping of one doesn't equal the starting of the other. So the balance sheet is likely to remain steady for some time. So they might not go into quantitative easing immediately unless there is a response needed because of, I don't know, some market circumstance or some unfortunate market circumstance. But higher pressure year end, which is this year, can change that, leading to Fed to consider resuming active purchases of Treasury bills as soon as 2026. So finally, we're starting to see this rhetoric because, as you might remember, they started quantitative tightening. The Fed has been winding down its portfolio since 2022, reversing trillions of dollars of asset purchases, which was the stimulant for the market, designed to stimulate the economy after the pandemic struck. At the same time, the Treasury has ramped up debt issuance, etc., etc. So they will reverse this. And when they reverse this, this is where the money comes from. This is where, and then, I mean, if we're going to have some kind of, who knows, in reality, like maybe like Andrew Tate, I don't believe in these predictions, to be honest. Like if we go down to 26, Bitcoin might as well die. So if we capitulate to something like 67, like, okay, 75, 80, 90K on some Black Swan event, something in the economy. And then finally, Jerome Powell coming out and saying, okay, or the Fed, we're going to stimulate the economy. We're flipping to quantitative easing. So that's why like this part, like this moment can be extremely volatile. It can be smooth, but it can also be, and usually it is, by the way, extremely volatile and not to the upside. So short-term perspective can be relatively painful. However, if you look at the general logic of things, I think that once they actually do it and once they actually flip to quantitative easing, this is when on Bitcoin we can finally see like my lovely target being hit of 150 to like 170K, which is what I really want to hit before I sell most of my Bitcoin and retire for some time and then see where my life actually takes me. So until then, I think that going into also the rate cut, I told you that the rate cut is coming up also in October, which is like a week away now. We could see some kind of pump into it. Then maybe we'll just probably consolidate for some time within this range, which just creates a trading opportunity. When it comes to ETH, same thing. We broke this level. We retested again. We lost it here a little bit. Then we're again going higher. So possibly, hopefully, we'll go for a retest on just this expectation of a rate cut, which is front running it a bit. And once we see the rate cut, we're going to go down a bit more. But I'm not expecting this Valhalla pump until what Fed talks about here, which is great stuff, actually comes to fruition and actually happens. So until this happens, we'll just play around. We'll just trade in the range. We've done quite well. We'll accumulate some cool coins. And as a reminder, guys, you can check out this video here if you want to see my trades. Again, it's not full trading club. You're not going to see spot in there. You're not going to see DeFi in there. You're not going to see passive income in there. But some active futures trades you can see here. And you can check out this video to see the instruction of how to actually get into it. So this is the current update. I know that as soon as the Bitcoin price goes down, everybody gets fearful. But just be objective. See you next video.